Candidate start. 5 seconds. Goods and Service Tax (GST) is an indirect tax levied when a consumer buys a good or service. India's current tax scenario is riddled with various indirect taxes which the GST aims to subsum with a single pan-India comprehensive tax by bringing all such taxes under a single umbrella. The aims of bill to eliminate the cascading effect of taxes on production and distribution prices on goods and services. Cascading effect of taxes is caused due to levy of different charges by state and union government separately. This tax structure raises the tax burden on Indian products, affecting their prices, and as a result, sales in the international market. The new tax regime will therefore help boost exports. In the changed scenario, the following taxes under center and state will be subsumed in GST. Central excise duty, additional duties of excise and customs, special additional duty of customs service tax, and cess and purchases on supply of goods and services. VAT, central sales tax, purchase tax, luxury tax, entry tax, entertainment tax, taxes on advertisement, lotteries, betting, gambling, and state cess and surcharge. The Lok Sabha passed the Constitution 122 Amendment GST Bill 2014 on 8th August 2016. The bill was passed by two-thirds majority with 443 members voting in its favor and none against in the final vote. Introduced in the Lok Sabha in May 2015, the bill and passed by Rajya Sabha 3rd August 2016 with 203 votes in favor and none against. The passage of this historic GST bill has now paved the way for the concept of one nation, one tax. The Union government has set the ambitious target to roll out of the goods and service tax GST from 1st April 2017. It was announced by Union Finance Minister Arun Jaitley after unveiling a detailed roadmap for GST implementation. This announcement was made after Rajya Sabha had passed the Constitution 122 Amendment GST Bill 2014. The GST will have two components keeping in mind the federal structures of India, the central GST and the state GST for goods and services that pass through several states or imports. The center will levy another tax, the integrated GST, IGST. Alcohol for human consumption has been kept out of the purview of GST. It empowers the center to improve an additional tax of up to 1% on the interstate supply of goods for 2 years or more. This tax will accrue to states from where the supply originates. Initially, GST will not apply to some products such as petroleum crude, high-speed diesel, motor spirit, petrol, natural gas, and aviation turbine fuel. The GST Council will decide when GST will be levied on them. Tobacco and tobacco products will be subject to GST. The center may also impose excise duty on tobacco. Parliament may provide for compensation to states for revenue losses arising out of the implementation of GST for up to 5 years based on the recommendations of the GST Council. There will be uniformity of tax rates and structures across the country. It will increase certainty and ease of doing business, make it tax neutral irrespective of the choice of place of doing business in the country. Due to removal of cascading, it will have a system of seamless tax credits throughout the value chain and across boundaries of states. It will help to reduce hidden cost of doing business. It would make compliance easy and transparent. The GST regime will have a robust and comprehensive IT system. Therefore, all the taxpayer services such as registrations, payments, returns, etc. will be available to the taxpayers online. It will reduce transactions cost of doing business that will eventually lead to an improved competitiveness for the trade and industry. The subsuming of major central and state indirect taxes in GST would reduce the cost of locally manufactured goods and services. It will increase the competitiveness of Indian goods and services in the international market and give boost to Indian exports. GST backed with a robust end-to-end, it seems, IT system will be simpler and easier to administer than all other indirect taxes of the center and state levied so far. The robust IT infrastructure of GST regime will result in better tax compliance that will curb leakages and incentive tax compliance by traders. GST will lead to higher revenue efficiency as it is expected to decrease the cost of collection of tax revenues of the government due to single and transparent tax proportionate to the value of goods and services. It will remove many hidden taxes, leading to transparency of taxes paid to the final consumer. The overall tax burden on most commodities will come down because of efficiency gains and prevention of leakages, which will benefit consumers. Goods and services tax has all the ingredients of a modern seamless taxation system, but its success will depend on taking on board all the stakeholders and eliminating all the irritants which goes against the principles of GST goods and services. Tax will also contribute towards a robust macroeconomic parameter, thereby increasing investor sentiment. Finally, the consumers will be ultimate beneficiary, as it would eliminate the cascading effect of tax